I would like now to switch to English and to give the floor to Renis Zaganjori, who is Assistant to the General Director of the Albanian Deposit Insurance Agency, and who is also a member of AEDBF Albania, to speak about deposit insurance and foreign currency issues in Albania. I would like to thank you for giving an international flavor to this conference, and you have the floor now.
Good afternoon, everyone. I don't know if you can hear me well. My name is Renis Zaganjori. I'm from the Albanian Deposit Insurance Agency, member of the AEDBF Albania, which is part of the bigger AEDBF Europe, which is the European Association for Banking and Financial Law. I would like to also thank Mr. Bercha and Mr. Zilberstein for hosting and for inviting us in this event. We're definitely pleased to be in as many as AEDBF events as we can, although we cannot make it always. Now, before starting, I would like to apologize for presenting in English because my Romanian is terrible, so I don't think it would be beneficial for any of you to speak in Romanian. What I would like to do in my presentation today is give another perspective from what was discussed in the conference so far, and that is the perspective of the deposit insurer in foreign currency issues. To start with, the outline of the presentation will be first to discuss the legal mandate of the agency, IDEA, by looking at the new legal framework that is in place, and also IDEA in insurance and compensation, and the effects of bank loans in insurance and compensation respectively, and what impact foreign currency bank loans have in these two activities. Then I would like to move on and discuss about the portfolio of the Deposit Insurance Agency and how we keep our financial means, to look at some of the foreign currencies that we have in our portfolio, and then move on to the foreign risk that the Albanian legal system and the deposits in the legal system pose in respect to deposit insurance. The next issue will be how we remedy this, how we deal with the situation where we have a lot of deposits in foreign currency, and the portfolio is mainly based in Albanian lek. Now, the legal mandate of the deposit insurer, the core activity of a deposit insurer, is to, or as we say, the reason that we exist is to compensate depositors of banks in the Republic of Albania up to the maximum coverage level, which in Albania is 2,500,000 lek, Albanian lek, which is approximately 20,000 euros, in case of a bank failure. Now, thankfully, we haven't had any bank failures as of yet, so we haven't had any issue as regards to that. So the main objective is compensate depositors, and as such, protect their legal interests and contribute to the stability of the banking and the financial system in Albania. An important point to make at this point, on which I will elaborate later in this presentation, is that irrelevant of the currency in which deposits are held, compensation is made in Albanian lek. Be it in US dollars, if deposits are in US dollars, in euros, etc., ADIA only compensates in Albanian lek, converted using the exchange rate of the Bank of Albania on the day of the intervention. Now, deposit insurance is free for depositors. Banks pay the insurance premiums for the depositors, and that's the main means by which we get money, the main means by which the agency is funded. The insurance premium is 0.125% of the arithmetic average of the total sum of registered deposits in the banks. So deposits are insured whether in Albanian lek or whether in foreign currency. And the insurance premium is calculated on the basis of the Bank of Albania exchange rate. Bank loans to depositors, be it in Albanian lek or foreign currency, do not affect the insurance premium payable to the banks from the banks, so there is no offsetting of bank loans, if they are in foreign currency or not. On the other hand, when we compensate, depository liabilities are set off against the payable sum to the depositor. So they are set off against the sum that the depositor will get if their bank fails. So the EU directive on this scenario is discretionary, because it leaves it up to the member states to decide whether they want to set off the depository liabilities in case of compensation, or if they want to compensate the whole fund. We have chosen to apply offsetting because we think that it protects our interests and as such is beneficial to our financial means. So what happens after we collect the premium from the banks? We invest the money. According to AEDB core principles, AEDB is the standard setter in the field of deposit insurance. The deposit insurer is responsible for sound investment and management of funds and maintaining an investment policy to preserve fund capital and liquidity maintenance. So what we've done is that we've invested the money we get from banks in government securities. Government securities, according to this pie chart, as you can see, they're mostly in Albanian treasury bills. 91% is in Albanian treasury bills, about 7% in Albanian treasuries, and very little is kept, in liquid means, so in cash and deposits with the Bank of Albania. As you might have guessed from this pie chart, most of the deposit insurance portfolio is in domestic currency, so Albanian lek. About 94% is in Albanian lek, 4% is in euros, and 2% is in US dollars. So that sums up at a total of 6% in foreign currency. So all our money is basically in Albanian leks. Although we have an investment policy to maintain about 10% of the portfolio in foreign currency. At bank level, this is about, it covers about 9 banks in total, and about 4.15% of total insured deposits. So we have 16 banks in Albania, 9 are fully covered, and the rest is not fully covered. 3 of them are Albanian banks, and 13 are foreign subsidiaries. However, I'd like now to move on to a more interesting part of this, which also relates to the foreign currency risk, which I mentioned earlier. Now, as I said, we compensate in Albanian lek. But as you can see from this pie chart, all the big share of insured deposits are in euros and in US dollars. So about 60% of the Albanian deposits are in domestic currency, so Albanian lek. About 36% is in foreign currency, euros. About 4% in US dollars, and less than about 1% in other foreign currency. So as you can see, we have 41% of insured deposits are in foreign currency. So out of the total, 41, a little bit less than half, are in foreign currency. And only 6% of the deposit insurance portfolio, which I mentioned earlier, is in foreign currency. So we have this discrepancy because of the lack of foreign currency available funds to the agency. So since we compensate only in Albanian lek, this exposes the portfolio coverage to adverse exchange rate risks, including deposits held in foreign currency. So if in this scenario, if domestic currency devaluates, then ADIA's total insurance portfolio also devaluates. Now the question begs, how do deposit insurance and how has ADIA dealt with this? So as you can see, foreign currency risk, high percentage of insured deposits in foreign currency, in euros or in dollars, which is typical of countries not in the Eurozone, and Albania, of course, makes no exception to this. So if foreign currency deposits are significant in total deposits and funds are not hedged, and if domestic currency devaluates, also total insurance funds devaluates. In the case of Albania, this is very true because 40% of the overall deposits are in foreign currency. So what has Albania done in regards to this? What has ADIA done in regards to this? we have again looked at the core principles of AEDI, which is the International Association of Deposit Insurers, which I mentioned earlier as well, which serves as the standard setter. And the core principles for effective deposit insurance systems and funding objectives are maintaining liquidity levels for the deposit insurance portfolio, which the idea has dealt with by investing in instruments with different maturity categories. The next one is having an appropriate level of deposit insurance portfolio, which covers in Albania about 4.15% of total insured deposits in the system, which is a good figure by international standards. The final two are the availability of other funding mechanisms in case of insufficiency of its portfolio, which includes obtaining supplementary backup funding for liquidity purposes when required. So in regards to these two last objectives of funding, what ADIA has done it has negotiated with the European Bank for Reconstruction and Development a credit line. So to ensure alternative sources of liquidity and funding, and in light of current domestic conditions, ADIA negotiated a line of credit with the EBRD. And what the credit line does is that it gives ADIA the access to up to 100 million euros in case of an insurance event. So in case a bank fails, we can ask the EBRD, of course we also pay interest for this, but we can ask the EBRD for up to 100 million euros, and the EBRD can give us the money in up to 7 days upon the request. This line is available for a period of 5 years, and the funds available from the credit line significantly also increase the coverage level of insured depositors and depositors per bank, which goes up to 6%. It was 4% previously, now it's 6%. So, as you have noticed, these funds are available in euros. So 100 million euros are made available to ADIA, and so the funds reduce significantly the risk from the pervasive use of the euro in the system. As I said, there is about 40% of total deposits in foreign currency in the banking system. So having these 100 million euros standby credit line that we've negotiated with the loan agreement with the EBRD significantly reduces the risk of ADIA from the pervasive use of euro in the system. So our portfolio is mainly in Albanian leks. Now we also have these other financial means that we can use in case we would need the money. In relation to the coverage level at bank level, the credit line also significantly, as you can see from these charts, improves with the credit line. The first one is the one prior to the line of credit, and the second one is after the line of credit. So as you can see, 2 more banks are covered fully by the agency's funds now, and the rest are 4 of them are above 50%, and only 2 are less than 50%. So these backup mechanism has increased the coverage level at bank level, also at deposit level, but also has reduced the foreign currency risk of the agency, which comes as a result of 40% of all deposits in the system held in foreign currency. So to conclude, the backup funding mechanism has been quite successful in our experience. We haven't had to use it yet, thankfully, and we hope not to use it. But in case we need to, it is there, as it has reduced the foreign currency risk faced by the pervasive use of the euro. At last, thank you very much for your attention, and if you have any questions or comments, I'll be happy to answer.
I would like to thank you for your presentation. If there are any questions or comments? Not really.